Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of AMC Entertainment, ticker symbol AMC. And so here I am recording this on Friday, June 14th, after the market has closed. And AMC, it looks like it closed at $4.99, being down just over 4% on the day and closing 1 penny below max pain, which was $5 a share. So that is disappointing, but closing right around max pain is not so bad. And if we do look over at the max pain for next week, for contracts expiring on June 21st, max pain is $4.50. So with price currently above that, I do think that is looking pretty good. However, it is quite possible that price is driven lower next week. So I do think that is something to be aware of, that, basically there is incentive to drive price lower by market makers. And so with that being said, if we do see lower prices next week, I do think it's good to not panic because there could be some discounted shares. And, I do think that a lot of the community right now is very bullish, is expecting that we see a squeeze around the 21st. Since we did not see that today, it's quite possible we could be seeing it into next week, but it's also quite possible we could see a little bit of a breakdown, and that would be really to weed out the weak hands. Anybody who might be paper-handed might be flushed out, and so that is what I think we might be looking at next week, so do brace for it if it does happen. But here, looking over at the chart, there are a few things that I did want to go over. One is this white uptrend that is based on the low that was hit on May 10th, as well as the other low being hit on May 31st. And we have been respecting this uptrend. And with that being said, we have also been putting in higher lows following along that trend line. So that also does look pretty good. But one thing about that, with this higher low here at a price of $4.10, it's quite possible people maybe have stop losses placed there, expecting higher lows to continue to be put in and to not be breaking below this uptrend or breaking down to that level. And so, if we are to create the maximum amount of pain, to liquidate the most amount of positions, that would be if price were to be driven down below $4.10, potentially coming down to this purple downtrend that I've talked about. And I've also talked about $3 coinciding with that price. I do have a call with the strike of $3 that expires next week. And so I would be out of the money if we did close at $3 a share next Friday, which would coincide with the price being right around here, $3 a share. And so if price does dip below 410, if it does come down to $3 a share, I think it's good to just brace for that and to, recognize that is just to flush paper hands, to flush weak hands out of their positions, and then maybe the following week we would see a run up. But, if it doesn't happen, if we don't get down to 410 and we don't get down to $3 a share, which I am hoping for that call that I have, I'm hoping to exercise it. I haven't done it yet. I likely will at some point next week, but, I'm a small player. That's just one call as opposed to thousands or tens of thousands of calls. But anyways, $3 a share, I'd be happy to pick up more shares at that price. And so that's what I intend to do. But, I also do understand that it's quite possible that could still be closing out of the money. As we have seen violent moves to the upside, we could be seeing some violent moves to the downside. But a level that I would look for us to hold if we do break this downtrend is the 786 here. That is at a price of $4.41. But then again, like I said, this $4.10 level, I think that's one we might be flushing down to and then maybe pulling back up to. So do keep that in mind. Some levels to reclaim to the upside: $5.70 or $6 a share. That does represent the golden pocket based on this retracement to the upside. So I think it would be good for us to be getting above those levels, or, especially getting above the high that was hit on June 6th, being at a price of $5.96, really, just getting up to $6 a share. That would look really good. But, regardless of what happens next week, if we see some violent moves to the upside, if we see some violent moves to the downside, I think it's good to not panic, to keep cool, and just keep an eye on the charts and see what they're doing. If we do go violently to the upside, I think $10 a share, that just being a psychological level because we like our zeros, there might be some resistance there. Or 1043, which I do have marked here in red, also $12 a share, or the prior high during market hours, which was $11.88. And if I do take a step back, we can see where that $11.43 level originates from. That was the high hit on November 6th. So there might be some resistance there. But if we do get above these prior highs, there is a gap coming to a price of right around $20 a share. So maybe we squeeze up to that level and then maybe pull back to this uptrend to continue to hold that as support. But like I said, I don't think there's any reason to be panicking if we do break this uptrend. Because I think that's just going to offer more opportunities. So what I'm doing is I'm just chilling. If price does break this uptrend, maybe I'd add a little bit to my position, but I would wait to see if we are holding these key levels like 441, like 410, or dipping down to this trend. And, ideally not going lower than $3 a share. And with max pain being $4.50 next week, I feel pretty confident in that call. Some of the other calls that I have that are out of the money, I expect to lose that premium, but that's not that big of a deal because they're small orders. And really, this has just been a great test for me to be learning more about options, whether that's calls, selling cash secured puts, which I have not done with AMC, but I do think that is pretty interesting. If price does dip down to $4.10 or maybe $4 a share, I might be interested to sell some cash secured puts. And if I do look over at the options table for June 21st, maybe that would be of interest. And so just looking over at the puts, we can see that a $4 sale strike price does cost $4, but then would need $400 to secure that. And so if price does break lower, that's something I would look for, but I would want more premium than just $4, maybe getting into the 10s, 20s, 30s. That might be something of interest. But for the time being, like I said, I'm just hanging out and, it is the weekend. So I do think it is a good time to sit back, relax, and enjoy. And on that note, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching.